The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So, stock of the day is Woolies. Yeah, we're sticking with the supermarkets. Yesterday, of course, it was Coles releasing third quarter trading update. Woolies saying the market remains competitive and consumer outlook uncertain, notably in the clothing part of its business. Group sales increased 3.2% in the past quarter, about $17.3 billion, better than expected increase, with e-commerce sales in the food business jumping more than 15% from the previous corresponding period. However, it's W Living, which includes Big W and Petstocks, was a laggard for the group. Woolies also saying weather events such as Cyclone Alfred led to the additional cost of between 20 and 25 million due to higher stock losses. Woolies saying the average prices, excluding tobacco, actually declined by 0.5% over the year, marking the fifth consecutive quarter of lower prices for customers. Well, that's what customers want to hear. What do shareholders want to hear, though? David, what do you think?
It was slightly better than expectations, but a little bit below Coles' result announced yesterday. And I think that that's probably a little bit of the sign of what we've seen over recent times, is that Coles seems to be outperforming Woolies. You mentioned the W Living division was, I suppose, the negative in the result. Their food business is going quite well, but Big W and their other smaller businesses aren't doing as well. So, look, it was an okay result. We've actually still got a buy on Woolies. I think it's okay value. The earnings expectations are that it should continue to grow into next year. So at current levels, it's reasonable. Probably not the most exciting stocks to be buying, but yeah, as I say, at current levels, it's not too bad.
Is your preference over Coles, or what are you doing with Coles?
Well, we've also got an accumulate on Coles. Personally, I probably would be leaning towards Coles, and I think it's probably performing better in the short term. Woolworths are going through a cost-cutting exercise. They obviously had those issues with their industrial disputes earlier in the year. So I think that Coles is probably a cleaner business at this point in time, so I'd be leaning a bit more towards them. Yeah,
and of course, David, we did see Woolies and Coles doing well when we saw that real market turmoil, of course, because they are defensive stocks. So you're not tempted, perhaps, to rotate out of these and find opportunities elsewhere?
Oh, not necessarily, and I think those defensive stocks are good to have in a portfolio, particularly in times of volatility. As you said, they're staple stocks, so we still need to eat. With prices starting to come down a little bit better, those inflationary impacts aren't as bad. So, yeah, I don't really think that there's a need to rotate out of them, but there are, I suppose, a good core stock to have in the portfolio to provide some long-term dividend yield and a bit of stability.
So, Grady, would you be buying it?
I couldn't agree more, actually, with everything David just said.
Yep.
Coles is our pick of the choice as well. I did a bit of research in a unit at uni actually on Woolies last year, and Woolies was the pick of the bunch back then because they had this pet division that was outperforming and doing really well post-COVID. Everyone seemed to buy a pet during COVID as their new companion for working at home, but retail spend in the pet division, as we've seen, they've started divesting some of their stores in the pet stock area and some of the vets that they owned as well. So we're seeing a bit of a downturn in pet spend right now, and that's really not doing very well for Woolies. They also had that industrial action that David mentioned, which really hurt their earnings in, I think it was the first half. And looking forward, Coles just continues to kind of ride the wave of garnering more market share while Woolies is under pressure. So we always see this, like when there's a duopoly in any market, you see kind of market share shift over time. But I'm actually really impressed with what Coles is offering right now. We've got a hold on Woolies at the moment simply because we want to see a bit of stabilisation post the issues that they had and see that they only had a 3.2% increase in group sales, which, as David said, was a beat, but it's only a slight beat and the expectations weren't that high. So I think for anyone looking for a defensive stock, any supermarket's going to bode pretty well for you in the short term because there's so much volatility in the market. But for a Coles, we prefer Coles because of their exposure. Obviously, they have the liquor division still. They're consolidating the liquor division, and that's going to do really well for them, whereas Woolies offloaded that.
There we go. That is a buy and a hold for our stock of the day, Woolworths.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.